Guys, we got to talk about the three asset classes or three crypto classes that are probably going to do extremely well in the next bull run. And we've talked about all of these sometime before as well, but we need to do a refresher on these because people are always looking for the next narrative for the bull run. And you will want to have at least some of these coins in your portfolio from these three categories. And the three categories are AI, DeFi, and RWAs. And we've done several videos on these before. AI is, of course, artificial intelligence, and we're looking at AGIX, Fetch AI, as well as some others. Now, I am a little bit weary about the AI category, more than the two others. You know why? Because I don't really see where AI comes in to crypto. Now, you can combine AI and crypto to help feed data, but I'm not really sure how much of a use case that actually is. You can definitely use AI to power like trading bots and stuff like that with crypto, but I'm not exactly sure how that brings value to actual tokens. AGIX, I understand their use case. They are a crypto marketplace that uses the AGIX token that actually parses out AI computing resources. That doesn't have much to do with the development AI, I don't think, but it does actually have a good marketplace where you can actually buy AI resources for your computing needs. I can see something in that. I can see something big in that. The other stuff, I'm not really sure. A lot of these AI tokens don't really seem to have too much to do with AI. Now, there is the graph, GRT, and that's supposed to be a crypto index. That just sounds like a big database to me. I guess you could use AI to parse through the data, but otherwise than that, I'm not sure. I'm worried about AI tokens, and that's why I'm saying AGIX and Fetch AI. They've been around for a while. They're more solid than the other tokens, and they're less likely to be scams because the relationship between AI and crypto is very tenuous, and I feel like a lot of these new crypto AI coins are just making crap up. So I would really be careful. But regardless of say, that doesn't mean they're not going to go high in the next bull run. They're still going to go very, very high in the next bull run. But the thing is, they might not be long lasting because they might not have a permanent fixture in the crypto world. As soon as people figure out, hey, what does this coin actually do? Why do I even need it for AI? And I think you're going to have to research hard and fast to see how to answer those questions. Because if you can't answer those questions, you definitely might just be buying into a scam. And of course, I don't want you buying into scams because that's really bad for the entire crypto market. So AI, DeFi, AI part of it, definitely got to be careful, but the hype will be huge because ChatGPT is still front and center. A lot of these big companies are coming out with AI innovations, and the crypto crowd isn't going to want to miss it either. So you'll want to have at least one or two AI cryptos in your portfolio. You just have to be very, very careful which ones you get in your portfolio. The second one, I spend a lot of time basically talking about, and it's DeFi. Yes, DeFi is going to be mainstream. Now, a lot of people don't agree with this because they think the mass industrial utility is going to be the main use case for crypto. I completely disagree with that. I think it's going to be DeFi. DeFi is the heart of this new financial system. To build a new financial system, you need a way to generate passive income. You need a way to generate yield. And, the investing itself is going to be a big part of the utility. And that's really what DeFi is right now. And, DeFi actually gets people to lock value into the system. It's not like a lot of the industrial utility where you can have a lot of transactions per second, just washing money back and forth. That doesn't really help the value of the coin. Locking in value actually does make the resource scarce. And that yield that you generate is a huge incentive for people to continue to hang on to your coin. So DeFi is not one particular coin. You can look at specific DeFi protocols: MinSwap, Sunday Swap, Saucer Swap, Quick Swap, Uniswap, Sushi Swap, Pancake Swap, whatever swap. They're all DeFi protocols, but you also need to look at the ecosystems, and that's where a lot of the big L1s come into play. Whether you're looking at Hedera Hashgraph, Cardano, Solana, Ethereum, all of these, they all have potential, but you should be looking at smaller coins that are building out the DeFi ecosystem, like Near and maybe even smaller protocols that seem to have a chance to capture a large amount of TVL. Because the amount of TVL in the system is going to go a long way to determining the price. You should also look at L2s in this instance, because a lot of Ethereum is also jumping onto L2s because Ethereum fees are really, really bad. And because Ethereum fees are really, really bad, like the layer 2 narrative is going to be pretty big. I don't necessarily follow it because I think the layer 1s are just going to be better investments, and I think they have better ROI potential. But you can't miss out on the opportunities of like Arbitrum, Polygon, Optimism. They're there. They're going to do pretty well. A lot of people that are on Ethereum aren't going to want to move to other chains. They're going to want to move to the layer 2s. And once they move to the layer 2s, they're going to have a lot of inflow of TVL. And I know that people are going to want to move off the main chain because the main chain is really, really expensive to use in the bull run. Out of the three narratives, DeFi still might be the biggest one because that's the one that locks up a lot of value in an investment type of scenario. And that will actually get people excited. That's what people want to invest into. They are going to be looking at yield in a bull run, and in a bear market too. Once the interest rates come down, like once the bond rates get back to 3%, 3.5%, people are not going to be happy with making that much per year. They're going to be looking for higher yields, and more people are going to be coming into DeFi staking. So make sure that, like, if you're investing in a long-term project, if it's not like a narrative like AI, you got to have good tokenomics with the coin. And by tokenomics, I mean like good passive income without massive inflation on the coin itself. Looking at 5-6% ROI on staking is pretty good. For DeFi, obviously it depends on the pair, but double-digit DeFi rewards are really not going to be that scarce, and I think people are going to be looking at that. And the third one that could be just as good as DeFi, if not more, is RWA. And that's something we talked about recently. That's real world tokenization of assets. Sorry for the hiccups. Like real world tokenization of assets. Now, assets, obviously there's a lot of them in the world in different classes, and they can all be tokenized. Not all of them need to be tokenized, but I think a fair amount of them will actually be tokenized. And that's billions, if not trillions of dollars of value for asset tokenization. There are several protocols that do this. I mean, like, I think one of the more well-known ones, XDC, but they're more focused on finance and not so much as real-world tokenization. I mean, you can look at some of the ones that are exclusively focused on this. Maple Finance, Centrifuge would actually be an example. They're all very small tokens, and I would actually include a couple in my portfolio because they've been trying to do real-world tokenizations of assets with Ethereum and other chains for a long time. And I think like everyone's going to want a piece of the pie. And this could be the DeFi of this bull run where things start to really run up. People are interested in tokenizing things like, expensive hotels, expensive apartments, expensive condos, expensive art, and expensive like bonds and stocks and stuff. So everyone can buy a part of the asset. If you can't afford, let's say, a Van Gogh painting, you can buy part of one. And I think people will be interested in that. I mean, like, there's a lot of parties that have already voiced interest in that. You can basically invest in fine art, even if you can't afford it, by tokenizing it. I think I saw something on Pawn Stars where they tokenized like a copy of the Declaration of Independence, and people were able to buy like a couple $1,000 parcels of it. So I think RWAs actually have a chance to be mainstream even before DeFi and AI, even though they are a relatively new market. And this one could actually blow up really big. Now, both DeFi and RWA need smart contracts. So if your platform doesn't have smart contracts, you might want to consider another platform at this point. Or if your platform isn't going to have a full smart contract suite by the next bull run, you might want to consider another platform altogether because you're going to need the smart contracts for functions like DeFi and RWA. And realistically, without smart contracts, you're not going to be able to develop many serious apps on your platform. And that's what's going to drive the next bull run. Now, Bitcoin doesn't really need that. It's the index coin. And no one else can really beat the index coin. No one's really looking for Bitcoin 2.0. It's just Bitcoin right now. That's the index. But if you're like any other crypto, you're going to need these features to attract people. You want RWA apps on your blockchain. You want DeFi apps on your blockchain. AI is kind of separate in itself, and I think that narrative will be pretty strong just because, like, people are going to be constantly reminded of it in media, but the other two you definitely want. So those, I think, are the three main narratives in crypto: AI, DeFi, and RWA for the next bull run. So let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.